strong quarter for yet another company, Sagility. Ramesh Gopalan, Managing Director and Group CEO of Sagility India, joins in. And after a quarter wherein they expanded margins from 20% to 27%. That's a serious expansion. Mr. Gopalan, you must be a happy person, because not only has the top line done well, but you've delivered some exceptional operational metrics here, much better than anticipated. What went behind this quarter?
Neeraj, good morning. Yes, we had a tremendous quarter in Q3. There were a couple of reasons, right? One, organically, we've been doing very well over the last several quarters. We've been growing across our client portfolio, and that growth largely continued in this quarter as well. But also, like we've mentioned in the past, our business has seasonality to it. And the second half of the year is typically in the US healthcare segment is what's called the open enrollment season. So that's the time when people renew their insurances, they buy or new membership comes into every health plan. And so that's the time that our clients expect us to handle more volumes. And so there is a seasonal spike to the business in the second half of the year, right? So both these impacts were the organic growth that we've seen in the other quarters, plus the seasonal nature of this business were the reasons for the exceptional performance. On the margin front, the additional tailwind that we had was also from forex, right? So as you know, the currency in a couple of our geographies depreciated against the US dollar. And since all of our revenues are in the US healthcare segment, the tailwind in the forex also helped our margins.
Mr. Gopalan, good morning. Tamanna here, and great to speak with you. I mean, this is a company which has now so much interest on it. I'm just wondering, because you talked about seasonality, what is next quarter also looking like, or the current Q4 looking like for you on Sagility, and any impact at all of new dispensation in the United States that you see on your prime US healthcare portfolio?
Morning, Tamanna. Yeah, so look, our broad growth for the year, we've given generic guidance on low to mid-teens growth. That is something that we hope to achieve for the overall year. Specifically, like I said, depending on where currency is and so on, there may be ups and downs on the margin depending on the currency impact. But our steady state numbers are low to mid-teen growths and Ebitda in the range of 24-25%. And that guidance broadly stays for the year. In terms of your other question, it's still too early to predict what's likely to happen. We are watching it closely. But so far, whatever we've heard and seen, there is no real impact to our business thus far.
Got it. I have one final question. What's the outlook ahead? The revenue now, I mean, the margin performance is exceptional. You've done some cost savings. Does this stay for the Q4 in a seasonally strong quarter, Q4 as well, I presume? And
yeah,
and what's the outlook? Sorry, yeah, please continue.
No, the open enrollment continues into early part of Q4. So there is some impact of it. So like I said, the broad guidance for the year that we've given, we will continue to achieve that is what we hope, which is low to mid-teens growth. The other thing I also wanted to highlight is we just closed an acquisition, a company called BroadPath. And so that was signed and closed end of January. So that will also get into our portfolio. And that's a company that adds almost 70 million to our top line on an annual basis. And it was an acquisition all funded by internal cash.
So does BroadPath also boost margins? Can you give us some picture on margins? I mean, you've had a healthy quarter. Is this the sustainable level that you're aiming for?
BroadPath was a EPS accretive acquisition, right? Having said that, BroadPath organically, their margins are lower than where Sagility is today. And so we hope to create synergies both on the revenue front as well as on reduction of cost. And so we will improve those margins over the next 2 to 3 years. But
Mr. Gopalan, lest it seem like a numbers-focused conversation, we look forward to a longer conversation, but today slightly pressed for time. I have a quick 30-second request from you for an answer.
Sure.
Brokerages that have come out with reports post your numbers, forecast a near 50% PAT CAGR over the next 3 years, including FY25. Are these reasonable estimates? Quick 30-second answer, please, sir.
Yes, our debt levels are continuing to come down, right? So that's one of the reasons why the PAT growth will be much higher than the revenue and EBITDA growth.
Got it. Mr. Gopalan, like I said, would love to understand more about BroadPath and what it does for Sagility and some more color on the overall business. Today, slightly pressed for time, but would urge our team will place a request, would love to speak to you post maybe 15th of Feb or early March.
Look forward to that.
Thank you so much and congratulations on a strong quarter.